What's up, Money Minds? Welcome back to yet another video edition of Market Briefs by the Minority Mindset. Today is September 20th, and here's some business and financial news you can finally use. From tomorrow till this Friday, you'll be receiving a slightly different version of our Market Briefs newsletter. Why is that? Our team is going to be at FineCon in Austin, Texas for the rest of this week. That's because Jaspreet is the keynote speaker at the event this year. So if you want to stay up to date with all of our adventures and endeavors from FineCon this year, be sure to follow us on all of our socials. I'll leave a link to our Instagram, TikTok, and Facebook accounts below. Or if you want to learn about what exactly FineCon is or just want to join virtually this year, I'll leave a link in the description below on exactly how you can do that. In today's market preview, brace for impact! Okay, that might have been a bit dramatic, but September has been a pretty bumpy month for stocks as this time of the year is really living up to its name. Stocks fell again last Friday after unemployment claims rose slightly from its pandemic low set the week before. So with just one more week left in September, we'll have to wait and see how things shape up. How do you think stocks will perform this week? Do you think they'll end in the red like they have been lately, or do you think they'll break the trend and go up in the green? Join the conversation and let me know your thoughts below. Next up in today's financial tip of the day, here's exactly how to start investing. Getting started as an investor can be a complicated process, especially if you're not prepared. That's why it is super important that you start assessing your finances, goals, and education before you just start throwing your money into an investment portfolio. You need to ask yourself, why am I investing in the first place? If you're still struggling or want to learn more about how to start investing, our team wrote an article on that exact topic on theminoritymindset.com, and I'll link it for you in the description below. But before we get into our first main story of the day today, I need you to do me a quick favor and smash that thumbs up button below and hit that notification bell too. That way YouTube can show our videos to way more money minds around the world looking for daily business and financial news just like you. Thanks for doing that. In our first main story of the day today, we'll be talking retail, and more specifically, betting big on brick and mortar. If the last 2 years have taught us anything, it's to expect the unexpected. The retail industry has been a tough cookie to crack over that span. In fact, as recently as just a few years ago, experts were talking about a retail apocalypse and the end of brick and mortar stores as we know it. But now, it looks like brick and mortar stores are kind of doing a 180. Two soon-to-be public companies that started as online-only retailers are now building brick and mortar stores. Allbirds, which is a shoe retailer, is opening 27 physical stores before its IPO. And Warby Parker, an eyeglasses retailer, is opening several stores before its IPO. Both companies are expanding into physical stores in order to fast-track their growth. That's because an online-only retailer can only be successful for so long. At the end of the day, Allbirds and Warby Parker have yet to be profitable with their current direct-to-consumer business model. And according to the Chief Commerce Officer for advertising firm Publicis, the internet-only business model is not a long-term profitable plan. When asked about it, he had this to say: "No digitally native brand has achieved $1 billion in annual revenue without a store. You need those stores as a cost-effective customer acquisition channel at some point." But overall, the bottom line is this: even Amazon operates 7 different kinds of brick and mortar stores. Even though online shopping is super convenient, there are still millions of consumers that prefer physical shopping, especially as things open back up and return to normal. In our second story of the day, we've got a little bit of a pandemic preview. Despite cases of the Delta variant remaining steady throughout the summer, the economy is actually in pretty good shape in some ways. U.S. retail sales actually increased. People are back out and spending money, which is very good for the economy. In addition, jobless claims have decreased. There were over 332,000 initial jobless claims for the U.S. last week. That number is only up slightly from its pandemic low, and much lower than it was back at the start of the pandemic. The 4-week moving average for jobless claims dropped to around 335,800. Best level since the pandemic started. But not everything has been good news. Overall, the August job report was pretty poor. Only around 235,000 new positions were added for the month, and the restaurant industry netted a monthly net loss of around 42,000. So for the most part, things are looking up, but at the moment, they're still pretty rough. And in today's Mind Break, did you know that the infamous soccer team Manchester United trades on the New York Stock Exchange? Not only do they trade, they just reported earnings last Friday. But it looks like Man U missed the goal. That's right, the club missed wide left on its earnings report before the bell, but it didn't move much. That's because there is a lot of positivity floating around the club after the return of their star player, and it's keeping the stock in shape. Cristiano Ronaldo returned to the club after more than a decade, and its stock rallied on the news back in late August. So far, the stock for Man U is up by around 5.44% this year. That's it for our main 2 stories of the day, so let's take a quick break to talk about our sponsor, LifeLock. Whatever you do, don't be a data victim. 1 out of 3 Americans have been a victim to identity theft. Don't let that happen to you, and instead, protect yourself with LifeLock. After a data breach, criminals can open new accounts, get payday loans, and even file tax returns in your name. So here's how LifeLock can protect you. Number 1, they scan and look for threats to your identity. Number 2, LifeLock alerts you of any potential threats by text, email, or phone. 3, LifeLock then works to resolve the issue, and a US specialist will work to fix all breaches. And 4, if things do go south, LifeLock reimburses stolen funds up to the limit of your plan. So don't delay, protect your data, and start your membership now with LifeLock. And if you sign up today, you'll get 25% off your first year. If you're interested in LifeLock, I'll leave a link in the description below for you to check out. Next up, we're going back to retail because it's an end of an era. The very last Sears department store is closing its doors for good in its home state of Illinois. Located in the Woodfield Mall, the shop is expected to close by November 14th. Sears, which also owned Kmart, filed for bankruptcy back in 2018. Transform Co. acquired Sears later on and has since lost all of its Sears and Kmart locations across the nation. The last Kmart store, which was located in Manhattan, recently closed and will be replaced with a grocery store. Transform Co. is now looking for new ways to profit off the space with new tenants by still managing the real estate of the prior Sears and Kmart locations. Here's a little backstory for you. Sears was first founded in Chicago during the 1890s and boomed in the 1900s for its wide variety of home goods and clothing options. The retailer was once one of the largest department stores in the US and had thousands of locations, but it plummeted in the 2010s to only 700 remaining locations when it filed for bankruptcy. Next up, today's mind blown is kind of a big deal. The Los Angeles Clippers just scored a major $500 million naming rights sponsorship deal with software company Intuit. Intuit now owns the title rights to the Clippers' new $1.2 billion arena opening in 2024. The brand new 18,000-seated all-electric arena will be known as the Intuit Dome. And Steve Ballmer, the owner of the Clippers, also said the arena will be equipped with a 44,000 square foot Halo video board that circles the audience. The 23-year agreement is expected to be worth around $500 million. It's also estimated the new Intuit Dome will generate $260 million in economic activity in the Inglewood area and provide over 7,000 full-time jobs. Clippers are also investing $100 million into the community for after-school programs, libraries, housing, and services for senior citizens. And in case you don't know, Intuit owns TurboTax, Credit Karma, and QuickBooks. It currently trades on the NASDAQ with a $154.6 billion market cap. And Intuit definitely isn't the first company to sponsor a naming rights deal with a big team. Chase Bank also made a deal with the Golden State Warriors worth $300 million. But the real question is, which team should the Minority Mindset sponsor? Next up is our Pick Your Brain section, and we'll start with today's second sponsor, Audible. Hey! Listen up, readers. If you love books but just never have time to sit down and read, then you need to try Audible. A subscription to Audible gives you just about a bajillion hours of audiobooks at your fingertips. Their services are honestly awesome, and right now if you sign up, they'll give you your first audiobook absolutely free. So if you want to check out Audible and start listening to your books, I'll leave a link in the description below to where you can find them. Next up in our Pick Your Brain, Tesla customers are getting a bit skeptical. In fact, some Tesla owners are even beginning to doubt the almighty Doge Father. Tesla owners have been waiting for full service capabilities for quite some time now, but the expensive technology keeps getting delayed and remains buggy. The autonomous software has gone from $3,000 to $10,000 in less than 3 years. So it looks like right now Tesla's all bark and no bite. Next up is our Money Mind section, where we pull comments directly from you on our YouTube, Instagram, and TikTok pages. Today's comment is from Bruce Banks on our YouTube channel, and the comment reads, "It took me 4 years to make $100,000. I was foolish enough to do this without investing. Plus, I had student loans. Don't we all, Bruce? If I knew what I knew now, I would have done things completely differently. So make sure to invest." You live and you learn, Bruce. Think of the bright side, though. At least the next $100,000 you make will be much quicker and easier than the first one. And if you want to learn more about making $100,000, how long it takes, and how you can do it too, we made a video on this exact topic on our main YouTube channel, and I'll link it for you in the description below. Thanks again for the comment, Bruce, and if you want a chance to be featured in our next Market Briefs newsletter, make sure to join the conversation and leave a comment below. Money Minds, we are reaching the end of today's Market Briefs newsletter, but here's just a few more things to keep in mind. Is Ikea gambling now? It looks like Ikea is keeping up with what's trendy by releasing its very own line of gaming furniture globally, like desks and chairs. And according to millennials, there is just one obstacle holding them back from buying homes, and that's student loans. Another thing to keep in mind this week is the next big beer. Anheuser-Busch is releasing an even lighter Bud Light. The new beverage will be the company's first zero-carb beer. And lastly, something seems fishy. A trader on Wall Street bought nearly 8,000 option shares of GreenSky right before Goldman Sachs acquired it. The trader made a 3,900% gain all in one day. Could somebody ask them what numbers they play in the lottery? But that is it for today's business and financial news. Thank you so much for watching Money Minds. Keep hustling, and I'll see you all in the next one.